What's up, all you cool cats? I hope everyone had a wonderful 4th of July weekend. I work full time, so I usually don't get to day trade, but I took last Friday off so I could stay up and enjoy the fireworks, so I got to trade. We're going to go over two things in today's video. Number one, we're going to go over what everything is that you see on my charts, so you both know what you're looking at, and also you can decide to use it yourself if you like it. And two, we're going to go over what I was following on the charts on last Friday so you can see just how much is involved in day trading. But I am going to go ahead, I'm going to zoom in on this chart of SPY here. And let us switch over here. Study sets. You can see I've got a lot of preset study sets that I've developed. But let's go with the one that has the RSI, moving averages, Ichimoku cloud, and VWAP. Let's zoom out a little bit. So what is everything that's on here? First off, RSI. If you don't know what that is, it's the relative strength indicator. On Webull, I've got a double RSI with the 7 and the 14 period moving averages, which I really like. I don't think you can set that up this way on Thinkorswim, but if I'm wrong, please let me know in the comments down below. I love the RSI for spotting divergences and knowing when reversals or even like continuations are setting up. You can always spot divergences very, very easily with it. Like this, just for example, just looking at this, see how that divergence went up, 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 where this was going down, 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 and we knew that price was probably going to start going up after that, and it did. All right, next up, we've got moving averages, and I'm going to switch it to just the RSI and the moving averages. So what moving averages do I have on here? And you might ask, why not the exponential moving averages? And that's because simple moving averages work just fine. What I have is the 10, the 21, the 50, and the 200. The 10's this line here, the 21's there, the 50 is there, and the 200. And those are the moving average periods that I've got on there. And what I've found is that in trending markets, price tends to respect the 10 and the 21, and it bounces, bounces, bounces. Once it breaks below those, you know that typically the trend for the day has kind of switched. And then the 50 and the 200 simple moving averages, they often act as support and resistance of like last resort. So if those get broken through, you know that the trend has shifted. Let's switch over to one that's got VWAP. I use a white line for VWAP, but if you don't know what that is, it stands for the volume weighted average price. And it's the same on all time frames. So if I switch from the 2 hour, maybe down to the 15 or anything like that, VWAP is VWAP is VWAP. It's going to be the same on every time frame. So it does act as kind of like a dynamic support and resistance that's just amazing. It's so helpful. And let's move over to the Ichimoku cloud. I only leave the Kaijun Sen, which is the baseline here in orange, and the Kumo cloud that's highlighted here on. The baseline is something that's calculated over the past 26 periods, so it's pretty significant. That's why I like it. There's also the Tenkan Sen, which is the conversion line. I don't put it on here. It's only calculated over the past 9 periods, and I don't put it on here because I've already got moving averages on here. And then there's another part called the Chiku Sen, which is, the Chiku span. I don't find it to be useful. It's kind of like the lagging part of this. If you know a good way to use the Chiku, please leave it in the comments below. And, you know, just like with any other indicator, you can customize the settings. So if you don't like the color of the cloud, you could change that for the leading span A and the leading span B. That's what forms the cloud. Or you can change the period. You kind of do whatever you want with it. And in my opinion, it is the most useful dynamic support and resistance indicator that is available. And then what I also do is on a daily, nightly basis, I chart what a lot of people call supply and demand zones. I do this, at least on Thinkorswim, I do this on the 2 hour time frame. And what I'm typically looking for are for spikes in candles that price action did not go through, and that on the 2 hour time frame, that tends to be respected. So we can see here, like this previous day, we had this big rejection wick here, and I drug this over. And once we finally got up into here, you can see price rejected it at first. Price was struggling to get above it. Price got up into it a little bit, rejected again, and then we finally got bullish enough to actually break through that previous supply zone. And now we would actually expect that to kind of act as a demand zone if price were to get back down to that. So these kind of, greenish highlighted areas, those are the supply and demand zones that I chart. And then the last thing, and I always, for every new chart, I chart the support and resistance line on multiple time frames. So if I'm zoomed out to the weekly, anything that I see as a support and resistance on the weekly, it's going to get a thicker line. A lot of times I use kind of like this light blue for like resistance, because like the sky is the limit. You break into it, you're into blue sky territories. And then, you've got your support lines. I use kind of like an orangish. I always thought of it as like, oh, it's, it's kind of like the color earth. So if you get down to the bottom, you're going to bounce from that. And so these are key areas and lines that have like strong order blocks. So if price breaks above or below these lines, it typically denotes a trend shift. And, don't forget that support often shifts to resistance and vice versa once they're broken. And so if I had to pick only 3 indicators to use the rest of my life, it's the easiest choice. Number 1 would be the RSI, and that is because of the divergences that it points out. You can almost always tell when something's going to happen, like this right here, from top to bottom. See how that's got a sloping down, and this was kind of sloping up. We can see once that bearish divergence formed, price started coming down. Number 2 would be the Ichimoku cloud. Why is it so good? That might be the topic for another video, but it is, in my opinion, one of the best dynamic support and resistances that you can use, and you can use it on multiple time frames so that you can kind of figure out where is price likely to bounce or get rejected off of. And then the last one is VWAP. Again, VWAP is just so good because it is dynamic. No matter where you are on the chart, no matter what the time frame is, VWAP is VWAP. And so you can find it anywhere on here. If I'm on the 4-hour time frame, if I'm on the 5-minute, if I'm on the 1-minute, it's going to be in the same location. So you know where price is likely to bounce from. So, if you think I'm crazy for having this much stuff on my chart, make sure to tap that like button. Now let's get into the day trade. Okay, let me switch back to the 15 here. I will actually switch over to investing.com. So big picture, what was going on that day? We had non-farm payrolls that came out. It was hotter than expected. We had the unemployment rate that came out that was higher than expected. And then we had average hour earnings that came in as expected. And so with numbers like this, it's hard to guess exactly what the market's going to do. But I incorrectly guessed that the market wouldn't like that higher unemployment number because it's a recessionary indicator. In hindsight, the market was keeping the Fed's dual mandate of low inflation and maximum employment in mind, and they figured that this was a sign that the Fed might cut interest rates sooner than later. All right, so I'm going to zoom back out. We're going to switch over to something called the ADD, which doesn't stand for what I have. It stands for the Advanced Decline Line. I've got this on the 1-minute, and of course this was on the 5th, so this was on that Friday. If you're not familiar with it, it is a breadth indicator, and that is breadth as in how wide versus your boss's coffee breath. So I was following multiple patterns on this, and it's so important to follow the ADD because you're seeing what the overall market is doing. So early on in the day, I saw this falling wedge, and I thought, okay, this is going to break out. So the market is likely to break out. As you can see, it broke down below this support line initially, but then finally broke out. And if you were to drag this pattern target here, it's a measured move, you can see from the top to the bottom there, from where we actually came down, if you drag up here, we got very close. We got very close to that throughout the course of the day. I also saw, and you could see this kind of like bullish divergence forming here. So that was another sign that the market was bottoming out. You had kind of like a rising wedge pattern that was forming here. And I took a measured move here to see how far it would come down. And you can see it basically fulfilled that like perfectly. Let's move on over here. We had something similar. This is one of my favorite patterns to actually take a trade off of. And it's something I call a double divergence. We had a bit of a bounce here, Not enough. The market wasn't satisfied yet. We crashed down again, and then we finally bottomed out. And you could see this on the RSI. We had our first basing here, tried to bounce out, bounce up, couldn't get above it, fell down again, and then we had a very, very pronounced bullish divergence. You can see we finally broke out there. So I was following this throughout the day. I noticed that there was, if you draw a line from here to here, that there was a bit of a resistance that we were coming up against. And so I took like a measured move here to here to see, if we broke out from that resistance, what would we get up to? And you can see we basically got up there. And then if you look at this blue support line and this blue resistance line, I noticed kind of later in the day, we were actually forming a big symmetrical triangle here. And I'll zoom out just a little bit here. And you see what happens when you zoom out here. But this was the pattern target of that big old symmetrical triangle. And you can see we met it. We overshot it a little bit. We came back down, basically used it as support. And then, of course, today we just shot off like a rocket. And honestly, that was, in many ways, that was being predicted by that symmetrical triangle pattern. So let's get out of here. Let's hop over to the Dixie, which is the dollar strength. Again, these are all things that I follow throughout the day. You can see you had a symmetrical triangle pattern here that broke out to the upside. And then I was noticing we were downtrending. So I drew this line in here. And just on a whim, I actually took a measured move from this bottom here to the resistance line there. And I drug it over and I was like, if we break out of that resistance, if that downtrend, what's going to happen? Okay, this is likely to go up here. And we can see price broke out, came back down, retested, and we basically did meet that. And what I was looking for is, can we break through this baseline? And unfortunately, we couldn't break through there. And we'll keep going through here. And then I saw what was, looking like a falling wedge pattern. And I thought, okay, finally, the dollar's about to break out. I was wrong. The dollar did break out, but it broke down to the downside. But, throughout this, as the dollar was selling off, I actually added like 10 shares of SLV to my retirement account because we were near support in there. And I got stopped out on those today for a small profit. But this is what I was following on the dollar throughout the day. And now let's switch over to SPY. What was I looking at on SPY throughout the day? And I want to switch to the 5. And throughout the day, a lot of times I leave the ES, the futures, on the 1 hour time frame. But as far as SPY, I like to leave the SPY on either 5 or the 1 minute time frame. So I was following this. I saw this rising wedge pattern, and we can see it broke down. We hit this main support line here of this was the upper resistance line of the ascending channel that I pointed out in my previous videos. And we bounced back up. We had another ascending wedge here, which kind of broke down, but not really. The market was just exceptionally strong on the day. We came up here again. I was watching this support line here. I knew if we broke this, we were likely to break down a little bit. We kind of did. Again, never really got the breakdown that I was looking for. And like an idiot, I was kind of scalping puts throughout the day. I had a few successful trades, but in general, I was missing stuff, and I had not recognized this channel that's in yellow yet. And so, I was taking some paper cuts throughout the day. And one thing I want to point out is if you trade options, you most definitely want to have the options chart up. And I prefer to even leave the Bollinger Bands on. The Bollinger Bands are here in blue. And the reason for that is you want to look for outsized moves. Generally speaking, any time that something is touching this Bollinger Band at the same time that you have maybe like a bullish divergence or a bearish divergence, depending on whether you're in calls or puts, you want to buy when we're at the bottom of the Bollinger, and you want to sell when we're at the top. And that's because a lot of times what happens is people are willing to overpay for those contracts when they're up here. And these contracts, if they get up here, they could be priced way above where the market actually is for the underlying versus where the price is here. So as at least for a good scalping strategy, that is definitely where you want to be. So this is the put that I actually bought into the close. And this was because we were near this main resistance line on SPY. We were rejecting on ES, and I spotted, we'll zoom back out again. I spotted this falling wedge pattern on Dixie, and I was hopeful that this would break out over the weekend, maybe in pre-market, and that this put would pay out. As you can see, that did not happen, and I got stopped out today. Please make sure to subscribe, tap that notification bell for my next video coming out tonight, where I go over my nightly market analysis. I'm covering 2 ticker setups that I pointed out in my last video. I'm going to be going over 2 new requested tickers, and you won't want to miss this.